Hey everybody, what's up? It's Booksy. Today is March 4th. It's a Monday after earnings. Going into earnings, I just wanted to repeat kind of a little bit what I talked about, some of the streams and other stuff. Mostly right about the reaction down. I said I was favoring down because we had this upturn right before, and the RSI became, unlike 2 and 4 hour, was clearly divergent. You had a higher top. It refused to close above 5 and repeatedly had these quick, up thrusts, high volume up thrusts at the top here and just could not hold it. And then you had that divergence occur. So this top is distributive. And what follows looks a whole lot like, if you're paying attention, it looks a whole lot like what we just experienced on the last earnings, almost identical. Now the setup going into this is a bit different. But in terms of like the overall price action, very, very similar. I'm going to talk a little bit about those comparisons today, but really very similar. I mean, overall, you have that same kind of push above the 100, 180 and 90 EMAs. Now I'm looking at the 2 hour. On the 4 hour, it rejected at the top. We never quite got there. It's about right here. And I'll go ahead and flip over so you can see that. We didn't quite get there on this last kind of distributive top that we had back in November. You can see that it misses it by a good bit. It does hit a very prominent creek, which we seem to have kind of gotten back to again. And you can see the 180 right there. We did breach it. So we're sort of advancing, but I don't really feel like that matters that much, because in the end, we've had plenty of times, like for example, we had almost 10 months where we were just going sideways before this massive drop, and we were going up and down above the 4 hour 180. However, it is important to note that we almost always distribute on the 4 hour. When we get right above it, we start a distribution cycle and then we come back below. So we're looking for that change of character. It did not happen on earnings, okay? And that shouldn't have surprised anybody if you're kind of paying attention to what was going on and where we were going. Now, the other thing that I had mentioned was that it is possible that we come back down, get to this like 408 area, and then rebound. I'm still of the opinion that that's possible, but I'm not going to sugarcoat it when I say that this top is distributive and that the breakdown did lose that trend. You can see it very clearly. Like, this is the only real strong trend we have aside from the original one going up back here in February, and it's gone, right? And as soon as we dropped it, we went down to about 413. That's not quite where the little gap is. The little gap's at like 408, 409. That's where I thought if we were going to kind of have this, we call it like a W, whatever you want to call it, an M cross, doesn't really matter. That's where I thought we might have that buy-in. And I had it drawn this way for a while. Now you can see that I had tentatively predicted, though I wasn't sure, and it turned out I was kind of wrong about which way it would go first. I had tentatively predicted that we might go down and check this creek early, and we didn't do that. So we didn't do it into earnings. We went up into earnings to hit that. Frankly, it looks very distributive because it is. We went up to a high place in order to, buy back shares, open short positions, you name it. And unfortunately, that big sell-off really is succinct. You come back down, you break down. Now, there's going to be a lot of folks that, like always, are kind of drawing comparisons to that 2020 model. That's essentially this situation right here, and this is sort of the one I don't like because it is very deceptive. And in this particular kind of instance, what would happen is that you would break out of the local trend here, which you can see is very thin line coming down. We kind of pushed outside of it this afternoon. We closed right on the line. I don't really feel like it was definitively anything. But basically, you would find some more support right here in the 420s, push up to about 476, and then redistribute again in a kind of a cattier top. And then this time you'd have a bigger, much more obvious kind of S-curve down, probably to $3, low threes. And I'm going to get to that again in a minute, but suffice to say, there are similarities between these two areas. There are some pretty key differences, and it is important to just kind of give it a full consideration. Now, one is that volume clearly is a lot lower than it was on some of these sell-offs that we had in the previous earnings report. And then you can see that the way in which we're navigating this kind of central, you could call it, I don't know, a center line. I'm just going to call it a support and resistance marker because I think that's basically what it is. The way that we're navigating it is quite different. We have a cross into it with an M here that also is a jump over another creek that I have illustrated that comes from way back. And then we have another M cross, right, that's much larger, that's jumping this really important critical one, which is the one I've been saying for a while, the orange line. I think is the most important jump that we have. It doesn't look right for some reason right now, so I'm not sure if I adjusted it or it looks wonky. Is it supposed to go over that top? Oh, Booksy. Ill-prepared. Yeah, I'm not sure why it looks like that. It should be right here. Okay. So some key differences, right? So like right now you can see that last time this happened, we almost have this kind of head and shoulder action, right? And there was a tiny head and shoulder in the top, and then it dumped, went really low, and ultimately sat beneath the range and went sideways. But the first primary action got down very, very far. I mean, and the one that we're kind of sitting on right now, I would say it appears a little bit stronger because it hasn't yet broken. It's indifferent, I should say. I wouldn't say it's necessarily much stronger, but it's indifferent, as in it hasn't necessarily broken that. Now, this could change tomorrow, right? It could dump tomorrow, in which case you'd probably see a continuation of this S-curve down to the 360s, something like that. There is a possibility it just goes and gap fills and then returns, but it's going to be a bigger ask, right, in order for us to get all the way back up to where confirmation is. So it's a dangerous situation. So here's my thoughts, okay? Basically what we've done recently is we've had a very large jump over that creek. And you can see that I've illustrated it on the RSI as well. And it's significant. It goes all the way back to that big upthrust that we had in July. And that's a big part of it. I think that we've hopped over it at this point. You can tell that there's kind of been a resistance. It's been pushing us downward. We got the double cat ears, and then we broke out, and we're above it. Now, that's very different than what we see on price action, which of course has all been downward. But we do have some hints of some pretty major leaps coming from a ways back. And I'm looking again at this kind of yellow line as a big one. And you know, if you go back to here and you draw this down to the next top, you'll see that we've already kind of made that jump. I don't need to finish the line. Hopefully you can see that. There's reasons why I've got it there instead for now. But the point is that, yeah, we've already kind of made a lot of those crosses. It's looking good, but it hasn't yet confirmed that upward move. So here's the short of it, okay? And I'll talk about the earnings in a little bit, and I'll end there. But I just wanted to quickly get through this TA. We have this support and resistance level right around this pocket from 415 up to 430. If it breaks below that, you're likely going to have a slide. It could possibly react at 4 and come back up and find support again above 426. That would be a bit bullish. But I think if it breaks down, the more likely situation is that we get a much larger S-curve. This is like a 1/2 S-curve, and then there's another one. So we would experience some kind of sideways action, more than likely in this range right here that we didn't trade. This range moves from about $3.50 up to roughly $4, okay? We'll get some sideways action there. It distributes, and it goes down to like about 3. Why 3? Because that's really low. Nobody wants to go down there, right? I had mentioned previously in other videos and all kinds of stuff, there's I don't want to say a new chart because that makes it sound like it's something that hasn't already been there. But there's a chart I've been using that I think is probably the most critical chart we could use, and that's this all-time chart. And it has to do with cycles, it has to do with repetition of fractals, all that good jazz, all in one chart that to me looks actually very simple. I know it looks maybe complicated at first glance. But the big thing is to notice these downward parallels and these upward parallels. Once you see those, that's kind of the big picture, right? And I did this back before we had any kind of upward movement, but I mentioned, and I don't know if you guys remember this, but I mentioned that going into earnings, we were actually going up along this parallel again. Now, that could be significant in the future. It could be very significant in the near future because as you've seen before, sometimes the resting on or the rejecting on these parallels has resulted in some pretty severe moves one way or another. And so it's not something that I take very lightly, but we don't have an answer for that yet. I want you to instead not focus on those upward parallels but the downward ones. These are the most important parallels I think we have. It's a channel essentially going down, and in my opinion, it's the most critical of channels. It can be easily drawn if you go to the all-time high and then you go to that July high. That's going to give you a perfect angle. You have to do it on the extended hours, and so you can only go up to like 4 hours. That's why I've stitched this together, and it's actually multiple images stitched together so I can see it all at once. Because on TradingView it won't let me see the whole thing on my screen anyways. So why is it significant? Because when you draw it back to that end of 2016, 2017 finish, the original kind of all-time high area where it started the distribution, you can see that we tested it again in 2020 around September, and then ultimately when we had the big breakout in January, that's where we went back. I think that marker right there, and I don't know if you can track with my mouse as I'm drawing it, but that marker from that 2016 into 2017 drop through the backup really that we had on the SOS, the huge SOS with the buy button removal, that tracks all the way down. And I think that's your major, like, I know I've got the little diagram up here in the corner, but I think that's the major back test. That's the big creek jump that we made, and we haven't come back to it. And it's been a ridiculously long distribution cycle, but it's finally made moves down. And if it doesn't stop at 3, then I don't know where it could possibly stop. It would be sub $1. Like, it's that simple, because the next one down is really low, and I genuinely don't know where else it would go. I'm sure you could do fib extensions, but I made a case for $1 and how that it seemed ludicrous. You know, it's kind of crazy. I don't really believe it's going to happen, but I made a case for it. There's a technical case for it, and there's not a fundamental case for it in my opinion. Again, we'll talk about earnings in a minute, but anyways, so I've been kind of contending that I think we got to get down to 3. I don't think we're there yet. I think this would be the move to get us down there. For some reason, all of my lines are like a little bit off. I don't know why. This should be a little higher, but basically coming down into mid to end of March, you would basically get to that 3 mark almost perfectly. So for whatever reason, it's not drawn correctly now. I don't know why. It looks like it shifted. But I looked at it not that long ago today, and it was right there. So I don't know. My other line shifted too, so maybe there's something wrong with the scaling. Maybe I hit a button or something. So there's 2 main scenarios. One is the one in which we distribute, and the other is where we go. And to go, your confirmation is above 5. I mean, it's that simple. It would have to jump the 4-hour 180. It would look like it would come back over this particular trend. So if you don't want to use the EMA, that's an easy way to figure it out, is just use the EMA. But it would basically have to SOS, have a sign of strength. It could be deceptively an SOS and turn into like a UTAD, which is one in which you come up thrust after distribution. You have a second up thrust. That would be kind of like what happened to us with this kind of the widening. That's almost like what happened to us way back. I think it was February of 2022 or 2023. I don't remember, where we had that 1, 2, 3 giant expansion. But I digress. Point is like, this would be the best case scenario, and I don't think confirmation can happen down here, even if it found support, because you run the risk of a big giant hook happening. That would look a lot like what we experienced, if you recall, back in that 2020 drop. And I'll just bring up this again since we had this on the table. I don't know if you guys recall, but that was like kind of what happened right here. I know it's blurry, but that was basically you had that big hook and then it dropped back down again. It'd be similar to that. So I definitely think that's a possibility, but that also is distribution. So again, what confirms distribution? Pretty much breaking down beneath 415 and then losing all support there, and instead having a resistance. You'd also then be back beneath this major creek. Okay, pretty straightforward. What does it mean if you go up? I think initially we would have to come up and retest this like 575 area. It would be roughly around, where we have a platform at 593, but it ultimately also got to deal with these other parallels, which are more short term. I don't want to get into that either right now. I could talk about that for half an hour, but basically like it would be in that region right there. And then I think then we would be in a possible bigger move up to 7. I think you're going to have to breach that 7 area. That's going to be really tough. And I think most of the big action would have to be after that, going up into about 13. You'd have a bigger move, and that definitely is a possibility. If we were to go down, I actually don't think it's that bad. I know that people would look at that and say, well, hey, it's 292. Maybe that's like the original. It's going to go down and hit the original, low. Was it 292 or 192? I don't even remember now. Probably 192 since I said it was 292. But either way, I get it. Like, I get why, like, a lot of folks are kind of like, I don't really think it's going to go up. We're kind of stuck in this sort of cycle of being disappointed. But I will say this, again, I don't really see where it could go, like, after this. I've been looking at the charts over and over and over and over again, and I just don't really get where else it's going to go. This is a really big macro chart for the weekly, and I just did a really simple, I can kind of get rid of the sine wave. That was just me just messing around with stuff. But I did a very simple, like, pitch fan, and you can see, like, we're basically there. I mean, we're essentially in a downward channel, and if we're going to be retesting anything, this is kind of about as low as we're going to go, maybe down to 350s, maybe something like that, according to this chart, right? According to that other chart where I've got the creek going down, it's much lower, and that has to do, again, with the fact that this doesn't have extended hours on, so they look a bit different. We're really low. You can see over here on RSI, we're kind of double bottoming almost, it seems like. But I always take that kind of stuff with a grain of salt, because there have been plenty of times where volume flattens out, the RSI flattens out, and it looks like we're going to stop, but then it ends up being like midway on an S-curve, and that's never like ideal. So you got to be careful with that. So I'm just kind of waiting for some kind of confirmation of a move. We're just sitting right now. The top's distributive to me. It looks distributive. That first price action, we got a bit of a double bottom there. And then, of course, you've got the gap below. So what did I think of earnings? I'll do this in like a minute and a half so we can keep this very brief. I thought that earnings was overall good. It was a double beat. Taylor Swift and Beyonce obviously had a lot to do with that. AMC really should have highlighted, in my opinion, the Cinderella story behind the whole thing. And I felt like, for some reason, the people that were talking, especially Adam Aaron, and I'm going to criticize him this time, were kind of down. I mean, he spent a lot of time talking about Twitter. I thought it was completely inappropriate for an earnings call. I did not think it needed to be addressed there. That's my opinion about it. You don't have to agree with me. But all they needed to say was, hey, we had challenges this quarter, we overcame, we seized opportunity, and guess what? We made it out better than most people thought. EBITDA was up year over year. I mean, everything looked overall better. It's on the incline. They're still posting a loss, if I'm not mistaken, in terms of profit. Like, if you look at the overall big picture, but they have a ton of cash on hand. So that's going to help with their debtors to make them feel more comfortable about, extending loans and all that jazz. I'm not going to get into it much more than that. I'm not very happy with the way that Adam Aaron went about it. And I also think that, and I know I said a minute and a half, we're almost done. I just think that they spent a lot of time saying, but, however, this, that, we already know those things. Like, we already know that it's not completely healthy. You know, they don't need to tell us over and over and over again, but we're not where we need to be. But it would have been bad without, Taylor Swift. Well, yeah, but that's not what happened, right? Like, you guys seized an opportunity, you made a distribution deal, you did what you needed to do. That's all you got to say. Instead they were very like, well, hum and hawing, like the actor strike really hurt us and this and that. And it was so hard. And well, yeah, of course it was, but who cares? Like, you overcame, that's the story that I think we should have heard. And it just felt weakened. I don't know, like they weakened their own earnings by being kind of downtrodden, I guess. And I just don't get it. So no news of dilution coming forward. We obviously have a lot of cash on hand now going into the next year. Should be a decent quarter. I don't think it's going to be the best, but I think it'll be decent. I think going into 2025, you're going to have a fuller recovery. The biggest gold nugget news I heard from earnings was that they said they really don't feel like they need a full recovery now at the box office, that they've mitigated, they've changed their practices enough that it's at this point, they're going to be profitable even if box office doesn't fully recover, which is a good thing. They're moving into a profitability cycle, which is good. And I don't know, like I felt like that wasn't the feeling that I had when I walked away from it. So that's why I'm kind of frustrated. It felt very down. And it should have been very up, like, because everything that was factually posted was good news. And I'm happy about that. But everything that was kind of said, tagged onto it, felt like, well, but we got lucky or something. It's like, no, man, just be confident. Let's just move on in strength. Last thing here really quick, IWM. I've been talking about the Russell 2000 a lot on my streams. Small caps have yet to break out, and right now this looks like it could be in an SOS stage, and if it breaks out, I think it's going to go really far. I don't know. To me, like, this is a really long-term accumulation. It could easily go back up, just like SPY, retest all-time highs. It's got the formation of a possible very large cup and handle that has yet to be seen yet. It's obviously not finished, and you'd have to finish it. But, shoot. I mean, I honestly think this thing could be at 250, before too long. But at the very least, you've got this kind of squishy middle right around the 220s, which is what Stockfather said anyways. And I agree. It's right here is the next kind of move up if you look at it in reverse. And I think that level being retested makes sense. Small caps getting a big boost from institutional money would be beneficial for AMC. So, and for a lot of stocks that we follow. So yeah. Keep an eye on IWM, Russell 2000. All right, that's all I got for you. Hopefully that was sensible and you guys have something to take away. I will catch you later in the week. Bye-bye.